Welcome back to Ask a DHJJ CPA, the podcast where real CPAs answer real questions from business owners. I'm your host, Emma Yurchik. As businesses grow, expand into new states, hire remote employees, or start selling beyond their home state and local tax questions tend to come up more often. And one of the most common questions is about Nexus. Nexus is one of those terms that business owners hear a lot, but don't always get a clear explanation of when it actually applies or when it becomes something they really need to take action on. So the question we're answering today is, when do you officially cross Nexus, and what does that actually mean for your business? I am especially excited about today's conversation because I've had the privilege of seeing our guest present on state and local tax at several different events. Every time I'm very impressed, not just by her depth of knowledge, but by how expansive this topic really is. You can almost see the audience's wheels turning as they realize how quickly this can impact a growing business. I'm joined today by Megan Fig, a principal at DHJJ and one of our state and local tax experts. Megan works closely with growing businesses navigating multi-state complexity and compliance. Megan, thank you so much for being here. Before we dive in, can you tell our listeners a little bit more about your role and the types of clients you typically work with?
Absolutely. Thank you for having me, Emma. My name is Megan Fig. I'm the state and local tax principal here at DHJJ. I've been here at DHJJ for 11 years, been doing public accounting for 15, 16 years. I stopped counting after a while. And I love it, right? We do state and local tax, and it's so complicated, and it kind of goes across all of our clients, right? It doesn't hit one particular client. If you're a service-based business and you think that you just work within your state and that's it, unfortunately, state and local tax probably does apply to you, right? If you sell outside of the state and you ship things outside of the state and local tax probably does apply to you. So it kind of goes across all different types of businesses. We've got the services, we've got manufacturers and distributors and retailers and everything in between, pretty much. So it's kind of fun because we get to see all of our different clients and how they're expanding their business and help them keep in compliance with that.
Absolutely. Like I said, I am really excited about this topic today. And every time I've gone to one of your presentations, you always start out talking about Nexus because that kind of sets the foundation, right, of everything else that you're going to talk about. So to set the stage, let's zoom out for a minute. From your perspective, why does SALT tend to become more relevant as companies grow?
Absolutely. So as companies grow, your sales are getting bigger, you're expanding your workforce, you're expanding across state lines. Your customers are not normally just within the state that you're within, right? Your customers are in a different state. It could be across the whole country. It could be the state next door. You could be sending your employees or independent contractors to go do some work in that state. All of the above, right? So Nexus tends to be more common when a business is growing because you are doing more. You have more customers and your customers are located everywhere. And to clarify what Nexus is, because that is just that word that gets tossed around, is Nexus is that connection with a state that requires a company to file within that state. That's the bare minimum definition of Nexus.
All right. So really jumping into that, you jumped into the next thing that I want to talk about, which is, what is that basic definition of Nexus? Diving a little bit deeper, I've heard you talk about physical Nexus versus economic Nexus. Can you break those down for me a little bit?
Absolutely. So when people think of a Nexus, they often think, hey, I don't have an employee going to that state, or I don't have, I don't travel there. I don't do all these things. Nexus can take place in different atmospheres. You can have the physical Nexus by having a remote employee or sending an employee or an independent contractor on your behalf to that state, maybe to do some training or to do an installation and things like that. That's kind of the tried and true version of Nexus that I think that most people or companies are familiar with, is that physical connection. But there's also the economic nexus piece of things. And with that means you don't have to actually physically go into another state. You just have to sell enough into that state, right? You have to have enough sales allocated or apportioned to that state to have a filing requirement, because now you've made an economic presence in that state.
Do you feel like that's the part that trips people up the most? Is it the physical
Absolutely.
nexus that everyone assumes, and then the economic nexus kind of comes into play, and that's maybe the part that gets missed?
Absolutely, especially for service-based businesses. A lot of my clients, when we have these discussions, they say, I'm an Illinois business and I do all my work here. My employees are only here. I do my work here. Then I only have to file here. And unfortunately, that's not true. If you've got customers located across state lines and in other states who are benefiting from your service in their state, then you likely have Nexus in their state, just depending on what your sales threshold is.
Wow. So how does Nexus differ for sales tax versus income or franchise tax?
That's a great question, Emma, because it is different when you're talking about sales tax versus income tax versus franchise tax. It's kind of all across the board. For sales tax, back in 2018, there was a South Dakota versus Wayfair Supreme Court case that went all the way up to the Supreme Court. And it was kind of a big landmark case because it's been many, many years since the Supreme Court has seen a sales tax case, right? And when that decision came out that said, hey, South Dakota, we agree with you. If you sell enough into the state, even if you physically are not going to the state, you have to file in that state for sales tax, which means you have to register, you have to collect the tax, you have to remit the tax, you have to file the sales tax returns, whether that be monthly or quarterly. And it felt like a big burden, right, for these companies, because now you're looking at all these states that says, okay, I want a piece of this action too. I want to make you have to file sales tax in my state if you have enough sales in my state. So for sales tax, every state that has a sales tax does have economic nexus, and they have a set threshold. Many states are around $100,000 in sales or 200 transactions. Some states differ. Some states it's a higher threshold. Some states have dropped the transaction number. It's all a little different, but to give you kind of a general idea, about $100,000 or 200 transactions in the state will usually cause you to at least look further to see if you have nexus in that state. Income tax and franchise tax is a little different, right? So franchise tax often has a bright line test. So if you're looking at states like Texas or California, they have franchise taxes. Again, they have a set threshold that they've given that said, if you surpass your sales in my state, you have a franchise tax responsibility in my state. Income tax gets a little tricky. Income tax depends on if you are truly a seller of tangible personal property only with no service, or if you provide any services, or if you're a service-based business. Depends, right? If you only sell tangible personal property into the state, you do not have physical presence in the state, and your only connection is soliciting those sales into the state, you likely do not have an income tax filing responsibility, because there's this nifty public law called Public Law 86272. Promise I won't quiz you on that number later, but that's the public law
Thank you
that
so much.
says,
I do appreciate that.
that's the law that says, hey, if you are a seller of tangible personal property and your only connection with that state is soliciting sales into the state, you do not have a net income tax applicable to you, correct? So that's great. That gives a little bit of protection, right? Depending on what kind of business you are. However, if you have service connected to that, or if you're just a service-based business, which a lot of businesses these days are, that protection does not apply to you whatsoever. So you have to be really aware of what you provide or you sell to make sure if a protection applies to you or not. Some states, let's say, you sell services. So now we're into the realm of you don't have that protection. Some states will say, hey, if you meet this threshold of sales, then you do file in my state. Some states are not as nice. Some states don't give you a threshold. They just say, hey, if you sell enough into my state, you should file income tax in my state. But they don't tell you what that is. So it gets a little gray and it gets a little murky. And that's when you have to rely on your tax professional to help you and guide you through that, because that's very hard to judge, especially if you're not in that realm and you haven't seen audits and you haven't seen rulings and things like that. You need a professional to help guide you through that.
Absolutely. I mean, there is a lot there, and exactly what I was saying earlier, how vast this topic is. You hear state and local tax and you think, okay, yeah, state and local tax, got it. And then
Right.
all of these different rules come into play. So I'm curious, why isn't there a single universal rule for Nexus across all the states?
Have you ever thought the states would agree on one thing across all of the states?
Okay, good point.
Every state's a little different, right? They judge it a little differently. You've got different politicians in different states who are making these rules. So to get all 50 states to agree on it just would not happen. Plus, all the states have different types of taxes. You have your sales tax and your income tax, but then you have a gross receipts tax or a franchise tax or a net worth tax and things like that. So there are just different types of taxes amongst these states that we're looking at. So you can't even apply a blanket rule per se with all of them.
Got it. Well, it sounds like Nexus isn't exactly one single moment, right? It's more of a
No.
threshold that can be crossed in different ways depending on the state. For someone who's listening and maybe feels a little bit overwhelmed already, what is the most important thing they should understand about Nexus?
The biggest thing that you need to understand about Nexus is that it is complicated and it can happen really fast. You might be thinking you're okay. You might be looking at your sales and be like, well, we're good. We're not passing thresholds. We're not doing this and that. But it can happen in a moment's notice, whether you get a really big customer that one of your salespeople quoted in. Your salespeople don't know things about Nexus or sales tax or income tax. And so it can happen by something happening and you're already behind the ball because you've already built out this work, or maybe you've already sent crews out to do some work in that state, etc. So being really aware of your sales, your salespeople and who they're quoting and sending quotes and estimates out to is really important. And then above all else, I say this time and time again, have the right tax professional and team on your side to help you through this. You in no way should be responsible for knowing all of the state tax laws and their weird nuances. That's what we're here for. That's what we do. So if you ever have a question, we would rather you ask than wait a few years and realize that maybe this maybe occurred a few years prior and now you're a couple years behind the ball on it.
Absolutely. This is where I think a lot of business owners are really going to start paying attention, right? So, what are some of the most common ways you see businesses cross Nexus without realizing it?
Sales being one, right? Again, those numbers happen each and every year. And when we're looking at it, it's not just a 1 year only. Once you trip that Nexus for 1 year, then you just keep filing, right? It's not a year-to-year decision per se. That's a big thing. Other areas that happen is, you have independent reps or independent contractors going out on your behalf. A lot of people don't realize because they think they're a different business. They don't realize that these people can trip Nexus for you because they're acting as agents on your behalf. They're acting on your behalf as your company in another state. They may not be your business, but they're still acting on your behalf, right? So that's another really big one. And additionally, there's the trade show aspect. Nobody really talks about that, right? Trade shows happen all the time. You're sending people to trade shows, you're going to trade shows and things like that. And there's very specific rules when it comes to trade shows. Sometimes you're awarded a little bit of protection if you're not selling at those trade shows or if you sell under a certain threshold. Sometimes you're not. Sometimes just going there and being in that state for a trade show for 2 days will create Nexus for you. And that's a big area that I see people trip up on as well, because to them, they think this is just a normal part of growing my business. This is what you have to do. I'm only there for 3 days, but it does create
Absolutely.
nexus.
That
Yeah.
one really surprises me.
Yeah.
So, can businesses cross Nexus in multiple states at the same time?
Absolutely. I mean, the sales factor alone creates a complicated, situation where you're constantly monitoring these numbers that are constantly changing. And then again, you're not static. You don't have just one employee or one independent contractor, or, you're constantly doing business across the board. And so you kind of have to keep your eye on all of the balls at once at the same time. And the big thing is just keeping your thumb on the pulse, right? What is happening? Where are your people going? Where are you getting big contracts in? Things like that. And if you have something coming in and you think that might be close to the threshold, I'm not quite sure, ask us. This is what we're here for. We are here to help you demystify the multi-state tax world for you.
Absolutely. What stands out to me is that many of these triggers are actually signs of positive growth, right? So,
Mhm.
why do you think companies so often realize crossing Nexus after the fact rather than in real time?
A big part of it really is when you're growing, you're focused on that. You're focused on all the things with that, and there's a lot that goes behind that. And you're not really worried about state taxes. To a lot of business owners at that moment, that is very, very far down on that list, because they're trying to get whatever job done that needs to be job done, or align the right people to get that job done, etc. You're worried about the actual in the moment selling your property, your service, your etc. Right? You're not worried about what state says, hey, you owe us some tax over here, especially if you're not familiar with that state tax laws. So it happens so easily, and it happens a lot where we will have a discussion with the client and we find out that they maybe have tripped Nexus years prior, right? And luckily there are ways to rectify those situations. But obviously it's always easiest and best to get started right from the beginning rather than trying to retroactively fix something.
Makes sense. Let's talk about some of the assumptions that business owners tend to make. So, what are the most common misconceptions that you hear when it comes to Nexus?
The biggest being, I'm located in my state. I do all my services in the state. I have no one going out anywhere else. I don't have Nexus. I don't have a filing requirement. That is very, very much the biggest misconception by far. The other misconception I would say would be, hey, they won't find me. How will they find me? I get that question a lot. How will they find me? How would
No
they
one's
even know?
contacted me yet.
Exactly, exactly. And it happens. First, states talk to each other. We're located in the Chicagoland area, and there are a few states, I won't name who, but there's a few states that share a floor in an office in a nearby location. If you get an audit by one state, it would not be uncommon that you might get an audit by another state who happens to share that same office with them. So,
Interesting.
yeah, yeah. So additionally, right, you have your customers or your own vendors. If they get ever audited in their state and your name regularly comes up in their audit, they'll flag you for an audit as well. Or even just a notice. It doesn't always result initially in an audit, but at least a notice to ask, hey, your name's come up. How much sales do you have in our state? What do you do in our state? And they call that a Nexus questionnaire, and it's we call them love letters here. It's a 1 to 2 page letter that you have to answer a bunch of questions about what your connection is with that state, whether it be sales, employees, independent contractors, etc. Have you done any advertising in the state? Things like that. And those come out also instead of audits. And that will get you on the hook to have to file in a state if you happen to answer one of those questions the way that they're looking for you to answer, which you do have to answer truthfully and honestly. So that will also put you on their radar.
Got it. Sounds like there are a lot of touch points out there, a lot of
Yeah.
things that people don't expect to be triggers for something like this. And
Exactly.
I don't think business owners are out there ignoring this on purpose, right? No
Mhm.
business is ignoring this on purpose. They're focused on everything that goes into running a business, which is a
Right.
lot. So this is a detail that I feel like can be very easily missed. If a company does cross Nexus and doesn't address it right away, what are the potential risks?
The biggest risks are you've got a growing tax liability that you haven't paid in. If you don't start filing in a state, the statute of limitations never starts running. So if a state finds you and you haven't filed in the state, they could go 20 years prior if they want, because you've never
Wow.
filed in their state before. So there's no statute. So that's a really big piece of it. And it comes out in multiple ways. Right. A big way that we see this all the time is when you're going to go sell your business, they're always going to look at state taxes, right? They look at your federal taxes, they look at all of your financials, they do all of the due diligence, and part of that due diligence is state and local tax, always, without a doubt, will come up. And I can guarantee you that I have not seen a deal go through in the last 8 to 9 years plus that has not had a state tax issue come out of it. Could be small, could be not, but they always ask about it. The best scenario is when we're on top of it, our clients are on top of it, and they get their due diligence looked at, and it comes out perfect. They think, okay, you did all of your state work, you're filing in the right states, you're doing all the forms correctly, looks great. We love to see that. But oftentimes that doesn't happen. And that's when experts like myself can help.
Got it. So if a business doesn't address it right away, or if there are other hiccups in the process, what can a business do in terms of can they go back and amend, or are there options like that?
There are. Our best vehicle is a voluntary disclosure agreement, or sometimes you'll hear us say VDA. And that basically is a way to come forward anonymously to the state and say, hey, our client should have been filing in the state, didn't realize that they should have been. We want to go back and file the taxes. Benefits to a voluntary disclosure is one, they limit the look back period, often 3 to 4 years worth. So you're not looking at potentially 20 years of exposure. You're looking at a very limited look back period. Two, most times they will abate the penalty as well. You will have to pay the tax, you will have to pay the interest on the tax, but oftentimes they will abate the penalties. So that's a great vehicle to take advantage of in these scenarios where you're going to have this past exposure. When it comes to sales tax, if it was uncollected sales tax, it is going to be a true expense to the business because it was uncollected and it needs to be paid forward. Sales tax is tricky like that, and that's why, you don't really want to get too far behind on it because it is a true expense to the business at that point in time. When it comes to income tax, when we filed in either your home state or any other state at that point in time, we always talk about income tax like it's a pie, right? You're never paying necessarily tax twice in two different states. You're looking at a pie and how much of that pie does each state get. So
Okay.
when we do income tax voluntary disclosure agreements, there's an opportunity to get a few years of amending your home state so that you lower that tax that you've already paid in that home state, since we now are apportioning the correct sales to the correct state at that point in time. The thing to note with that is sometimes income tax voluntary disclosures can run 4 or 5 years, depending on the state, and you can only go back and amend 3 years worth of taxes in your home state oftentimes. So that's the one key thing. There might be 1 or 2 years of overlap where you cannot go back and amend your home state, but oftentimes you can, which is great. On the income tax side, it's just going to be a bit more on the legwork of getting the work done and the tax returns amended.
Got it. So it sounds like raising your hand and coming forward with that really pays off in the end, right? Waiting makes things more complicated, more costly.
Absolutely. Definitely more costly. And if you wait, let's say you do get to a point where you want to sell your business and it comes up in due diligence, we've seen deals fall through because state issues weren't handled correctly, or we've seen the holdback dramatically increase because things on the state side weren't handled correctly. Or we've even just seen the sales price completely change because of it. And nobody wants
Wow.
that.
No.
So it's important to get ahead of it. If you're thinking you want to sell your business in the next 5 to 10 years, let's do a Nexus review where we're going to take a look at where you should be filing, where you have any past exposure, what is that tax exposure, what's that amount we're looking at, and then we can decide if you're going to go back and file these voluntary disclosure agreements, et cetera, or where you need to start filing in and go forward so that when you go to sell your business, they look at your state and local tax exposure and they think, wow, this was done perfectly. There's nothing to do here.
Absolutely. That really brings us into the next thing that I want to talk to you about, really shifting into that action mode and what business owners should be doing now. So, what are some signs that tell business owners it is time to have a SALT or Nexus conversation?
Is your business growing? Do you have multiple customers in other states? Do you have a remote employee in other states? Do you have any independent contractors? Maybe do you have a phone service that is not located in your home state? Do you store data on a server that's not located in our state at all? Any of those things
Wow.
will be a big, big point that you need to look at your Nexus and see where your filing responsibilities are.
Sounds like to me maybe every business.
Pretty much, that's where we're getting at. Exactly. I mean, really, even if you are located just in your home state, you really are. You have your brick and mortar shop, you don't do any online sales, a big part is still sales tax, right? You want to make sure you're handling your sales tax compliance correctly. Do you have the right certificates on file if a customer happens to be reselling it or tax exempt? How often do you have to update their certificates to make sure that those are valid still? You know, even within your home state, if that's truly where you are and that's the very minimal, minute amount of people are in there. But even if that's truly the box that you are in, there's still things that happen within your own state that you might not be aware of. We're also very close to Chicago, where we're located. Chicago has its own set of tax rules that we can do a whole nother podcast and another day about. But they have their own taxes, and you don't have to have your business in Chicago to potentially have to file and pay taxes in Chicago.
Oh, wow. Just opening up a whole new can of worms here.
It's what I do
So,
best.
so you touched on it briefly. You mentioned a Nexus study. I want to talk about a few different things with that. First, when does it make sense to do a Nexus study? And second, what exactly is a Nexus study? What all does that entail?
Absolutely. So, Nexus study, as far as when to do it, if you've never done it, you should do it. And then every year we can do a small update, right? It doesn't have to be a big full-blown Nexus study. Once you do the initial one, and then you just have your normal sales going and everything going each year we can look at just the update to see if there's any additional states at that point in time to file in. But the Nexus study is important because if you don't do that, you truly don't know where your tax exposure lies, and you're kind of sitting in the dark, hoping that you're okay. And when it comes to a Nexus study, the big things that we need are sales by state. So a big part of that is how are you keeping that information? How do you know what your sales by state are, especially if you're a service-based business and you're doing your work in Illinois? How do you know that your customer in California is the one where that sale gets thrown to? And having those discussions on what your invoicing system looks like, your record keeping system looks like. And then we look at your employees by state, what your independent contractors are doing. Oftentimes we'll take a look at that travel expense. What's hanging out in that travel expense? Where did you go? What did you do? Did you go to a trade show? Did you send an employee for training somewhere? Etc. So those are the things that we'll take a look at in a big Nexus review. And then at that point, we'll quantify what your state tax exposure is in the states that you have Nexus so that you can then make qualified decisions on where you go from here, if a voluntary disclosure agreement is what makes sense, or what options you have at that point.
Got it. So if you had to give business owners like a short checklist related to Nexus, not everything, just the biggest priorities, what would be on it?
Sales. Number one, sales. Where are your sales? Where are your customers? Where are your customers benefiting from your service? Where are you shipping items to? All of that. Sales. And a big part of sales, like I just said, is record keeping. How are you keeping those records? Because you don't know where your sales are if you don't have good records showing that information. That's big. Employees, where are they located? Where are they remotely working? What are they doing for you? And where are they doing that for you? Independent contractors, what are they doing for you? Where are they doing that for you? And then again, just travel in general. What is happening in that travel at that point in time? Where are you going? What are you doing in that travel? What are you doing in that state?
Got it. That makes sense. It's a lot of record keeping, but all very, very valuable and will make a huge difference in the long run, right?
Absolutely.
So for business owners wanting to make sure that they are tracking everything and keeping those records, do you have any recommendations for them?
Absolutely. So record keeping being the most important, you want to make sure you know where your customers are located. And sometimes it's not even where they're located, but where's that benefit of what you're doing for them being felt? And is it across multiple states? Another piece is, your internal bookkeeping or accounting staff is not in a silo. They might feel like that sometimes, but they're not in a silo, right? They're on the reactive side of what your sales staff is doing. So we've had plenty of opportunities to come in and speak with business owners and their sales staff and do presentations and training on what they need to know about multi-state taxation, whether it be sales tax or income tax, so that when they're out there quoting jobs and doing what they do best, right? They're growing the business, they're getting those sales in, but as they're doing that, they can be aware of when to let their bookkeeping or their internal accounting staff know, hey, we're going into a new state. Or, hey, I've got this client who might be exempt, but I don't even know what form I need to collect for that, etc. So we've done trainings with the sales staff to tell them like what is exempt, what is not exempt, what certificates they might need to ask for, when to be aware of when they're entering into a new state and to be able to tell that their internal accounting team or even us so that we can help you get registered or they can help you get registered in that state and get from the forefront forward. Because the worst is when you've got a great sale and it's a big win for everybody and they say, okay, send out that invoice. And the internal accounting people are going, wait a minute, you didn't even talk about sales tax and it's not even in the contract at all. Can we charge for it now that it's not in the contract, now that you didn't say that? So knowing that so you can have it written into the contract too is really important because you don't want to lose out on that money, but you also don't want to leave exposure for yourself on that situation. So having everybody on the team on board and involved is super important.
Wow, that sounds like an incredible resource for them to be able to have that training. And I know in this conversation, we keep talking about business owners and the accounting team, but really, SALT is something that affects everyone in an organization. Everyone needs to be aware of just how vast this topic is and how much it can affect a business.
Mm-hmm.
Wow.
Absolutely.
Well, this conversation has been fantastic. As always, I love talking about this with you because I pick up on something new with every conversation that we have, and it's a good reminder to have for every business, everyone within a business to keep talking about these topics because something new is always coming up, right? So, before we wrap up, I would love to end with a few takeaways. If a business owner only remembers a few things from this episode, what are the top three things you want them to keep in mind as they grow?
Watch your sales by state. Make sure your record keeping is good for that and you can monitor where that's going. Watch what your employees and independent contractors are doing on your behalf and where they're doing it. And third, and biggest of all, don't fear filing in multiple states. Oftentimes, like we've already talked about, that means you're growing your business. This is very common. This is very normal. And it's good. It means you're growing your business. It's getting bigger. That's what every business owner wants. So don't fear it. The big piece with multi-state taxation and SALT is to involve your tax professional from the start. That's the biggest thing, because we can help mitigate those issues for you. We can keep you on the right path so that you can focus on growing your business.
Absolutely. Megan, this has been incredibly helpful. And I think, just like you said, a great reminder that Nexus isn't a sign of something that's gone wrong, but a natural part of growth, and is a good sign of positive growth. So Megan, thank you so much for sharing your insight and experience. And to our listeners, if this episode was helpful, make sure to subscribe so you don't miss a future episode of Ask a DHJJ CPA. If you have any questions you'd like us to cover in the future, please feel free to reach out or drop them in the comments. Thanks for listening, and we'll see you next time.